Hey, David, tell us a little about who you are. And I know I've read all about you. You got a ton of things going on. Give us a brief breakdown of who David Morgan is.
Oh boy, you really put me on the spot saying brief, but I'll tell you, I was interested in money from a very early age, and I really wanted to get in the financial markets. It was kind of a passion from 14 years old or so. I actually ended up with an engineering degree, went in the aircraft industry for a brief time, but I went on, got a master's degree in finance, and I ended up in the economic space in my 30s. And I've been there ever since. And I'm really been overeducated, self-taught on the true meaning of money and fractional reserve banking. I knew a lot before I was like 20 years old. So I've been kind of in the honest money, hard money camp since a youngster, and I followed it all the way through to present day. And my specialty really is the precious metals. I really took a nice ride in the futures market and got in at the top. Well, not really the top. I got in near the top in December, and I got in near the top at $300 gold. This was in December 1979. I rode it all the way to the top. It peaked on my birthday, January 21st, 1980. I was 27 years old, so really a nice thing. And after that market started to degrade, I really wasn't that big of a silver nut, and I watched the percentage move, silver versus gold. And wow, silver really rocked. What happened here? So I started an in-depth study on the silver market, looking at, well, why would Bunker Hunt favor silver over gold? And so I started looking, at everything I possibly could in the silver market. So over time, I just kept, reading all the financial markets. I mean, I've always favored both sides, the commodities and the equities. I like them both. And when I was working on my finance degree, our top professor said to the class, well, we have a silver expert in the room, because I had done a one-on-one with her. We looked at some financial planning and that type of thing, and really she got to know me pretty well outside of the classroom. And that was the first time I'd ever been referred to, publicly or even really thought about it as a silver expert. So that's sort of the background. I've been writing the Silver Investor. Actually, the website is it's silverinvestor.com with a hyphen between them. I've really moved everything over. We're in transitioning right now, Todd, to the Morgan Report, because I don't want to get labeled silver only. We look at all the resource sector. We've looked at oil. We've looked at lithium. We've looked at moly. We've looked at everything. Anything that has value in it and is undervalued, we like it if it's in the resource sector or it's a real wealth or tangible asset. So I'm trying to rebrand the Morgan Report so that we're broader based, because we are. Does not take away my silver status. It's still a passion of mine, something I still spend a great deal of time learning about. So we got on the web about 1998. I was doing consulting. Did not even have the silver-investor.com URL. Moved to Washington State in 1999, and that's when I really got the synergy I needed to start, getting this message out to the public at large through the website, through the web presence. We used to do a hard copy newsletter. That's sort of folded with the electronics, and we're electronic only. So if you're interested in our work, you can get on our free list. The free list is just go to themorganreport.com. There's a free report over on the right-hand side. All we need is the first name and a valid email address. We'll give you a free report that's pretty in-depth, gives you everything except the symbol about a new mining technology for the junior space. And Todd, most newsletter writers, as you well know, specialize in like the junior mining industry. Believe me, I don't really care for it. And I know some of my friends in that space don't like it when I say that, but I'm being truthful, because it's a very, very tricky space, and you can't really do analytics on a company that's exploring for something or that type of thing. So we have always broken down the Morgan Report from a top tier, mid tier, and speculative categories, so that people can balance a portfolio within the resource sector so that they're protected. I want to mitigate risk as much as possible. Obviously, Todd, you know what you're doing. You've been trading for years. Same here. We want to get the most upside we possibly can with as little downside as possible. So that's how I structured the Morgan Report, and I have a great deal of detail on how to use the Morgan Report once you become a full-fledged member of the site, which I'm not pushing too hard. You can get the free newsletter, get weekly updates for free for as long as you like.
Well, how do we become a member of the site? Tell us how to do that. Go ahead.
That's simple. You just go to themorganreport.com and you pull down Become a Member, And there's a couple levels of service. There's the premium level, which you get to see over my shoulder, see my trades. I bring out the charts. I use stock charts most of the time. I probably have about 5 charting services. Stock charts is one I'm the most familiar with and use the most. So I annotate right on the chart as my lovely voice goes through, where we're consolidating, where the breakouts are. I use horizontal lines. I don't like channels too much, although I look at them. And I have a little bit different way of trading than a lot of people. I used to have every doggone, indicator that there was. And, I'm going to have to digress here, Todd, maybe get a little laugh from the audience. But I knew a trader named David. I won't say his last name just for protection purposes, but he's a big-time trader in the San Francisco Bay Area, which I was at the time. In fact, I was born there. And David and I met at an options conference. And so we went out for lunch. We started, BS. And so we got to know each other fairly well. And we would meet up occasionally and have lunch. And, he brought me into the trading floor that he was operating at the time. And it was during the tech bubble, and it was just crazy because he was only trading like IBM. He's pretty conservative like me. And, there was all these crazy tech stocks just going ballistic. But anyway, on point, he says to me, and he was British educated. He kind of had that kind of snobby sound. He wasn't. He was a down-to-earth guy. But he says, David, do you know why we have all these indicators for the markets, and talking about the Wheeler Index, Bollinger Bands. I mean, I can't even remember all the ones I've forgotten. And I said, well, yeah, of course, to get an edge on the market, to, get better data, to, better analytics, to get an edge. He says, oh, no. We have all those to impress the girls at the bar. And I'll never forget that. And there's a lot of truth in that. I'm very basic these days. I look at breakout points. I look at price and volume. I think one of the best teachers I had was William O'Neill, and I was taught by William O'Neill himself decades ago when he first founded Investors Business Daily, and I like his methodology. I use my own now, but a lot of it came from Bill O'Neill. Keep it simple and sincere, and that's what I do. So that's part of the service. The other part is when we do a conference, we take a camera with us at the conferences that you're allowed to film. Some you're not. And so you could see my interviews with, let's say, CEOs of major mining companies, mid-tier mining companies, and junior mining companies. And, of course, we have a two-way service. In other words, if you're on a premium service, you can write in and say, hey, David, I'd really like you to talk to XYZ Mining about, why they issued more shares or whatever. And so, we have that in our back pocket when we see these people at these investment conferences, specifically resource conferences in most cases. I sit down with them, and, of course, I've got my set of questions, but I obviously, put in, what our readership wants, our membership wants. So it's a service that is above and beyond most of the ones that you see out there as far as what's in the precious metals newsletter space. And I'm a top-down analyst. I look at silver, gold, all the commodities, but particularly the metals, which I do spend the most time on, from a top-down analytical perspective, meaning that I'm one of the few that's in my space that looks at it as a commodity and also from the equity side.
All right, well, I'm going to cut you here short for just a second. This is the Bubba Show. We are with David Morgan, the Morgan Report, silver-investor.com. He's bringing us all kinds of stuff. He's going to explain to me what top-down means because I want him to explain it to you, but we are with David Morgan from silver-investor.com. This is the Bubba Show. Make sure you go to the BubbaTrading.com and check out our hedging program. You'll see that this is probably one of the best investments you can ever make because we will actually tie up your portfolio and allow you to stay in while you compound your endowment model portfolio, which you're turning into. We're going to step out here for a break. This is the Bubba Show. We are again with David Morgan from the Morgan Report giving us an update on metals, and he does agree with Bubba a little bit so far that commodities and metals are the same thing. The Bubba Show Top Up Boards. We'll be right back with more from David Morgan after the break.
Right, turn off the lights. We gonna lose our minds tonight. What's the dealio? I love when it's all too much. 5 a.m. turn the radio up. Where's the rock and roll? Party crasher, penny snatcher.
Bubba Show listeners, you know what a big fan I am of Thinkorswim, the platform built by traders for traders. And you also know that Bubba can help hook you up. All you have to do is email me at bubba@thebubbashow.org. But what I wanted to talk to you about today is that through the month of January, every Wednesday night, Thinkorswim is going to have a special webinar. Whether you are a beginner or an intermediate, they've got two separate ones that will help you become a better master of the platform that you're using, which ties into what Bubba does here on the show every single day. So every Wednesday night, it's 8 o'clock Eastern, 7 p.m. Central, Thinkorswim will offer a 1-hour, either beginner or intermediate webinar that will help you become a better trader. If you want to get hooked up, just email me at bubba@thebubbashow.org, and I will give you all the details of all the different webinars that Thinkorswim is offering. Thinkorswim, built by traders, for traders. Hey, traders, are options your game? Well, guess what? Bubba and Badger are going to put together a 12-week webinar series to teach you options from the very beginning to the very complex strategies. We will be doing a 1-hour, once-a-week webinar telling you exactly what options are, where they become effective, and how to use them. Now, there's going to be a cost here. If you have some interest in learning the option market from the apps from the very beginning, if you've never traded options before, or if you are someone who wants to get a little bit more experience and get an idea from 75 years of training and trading, I urge you to email me now at bubba@thebubbashow.org, because I want to hook you up. There is going to be a cost associated with this. I will be happy to discuss it with you personally, but get involved. 12 sessions with Bubba and Badger, 1-hour training. Email me, bubba@thebubbashow.org. Hey, Bubba Show listeners, have you checked out the Sunday night call yet? If you haven't, you're making a huge mistake, and Bubba's going to tell you why. Each and every Sunday night at 6:30 p.m. Eastern Time, the Badger and me break down trades for the week. We watch them, we manage them, we recommend them, we help you trade them, we help you become more successful. Now, what I want you to do is I want you to email me at bubba@thebubbashow.org. I will send you a link to give you a 1-month free trial, and where you can check out 4 Sundays of what we're doing on the Sunday night call and decide if it's really for you. What you need to do is you need to email me right now at bubba@thebubbashow.org. I want to hook you up. I want you to be a part of my team. I want you to be better, and I want 2015 to be better than any year you've ever had. So email me now at bubba@thebubbashow.org, and I'll send you a link and hook you up for a free month of Sunday night calls. Welcome back to the Bubba Show. Todd Bubba Horowitz with David Morgan from silver-investor.com. The Morgan Report. Pretty knowledgeable guy. Knows a few of the same people that I know, and we've never met face to face, so always really pretty cool. And okay, so first thing is, I say that metals are a commodity, just like any other commodity. They get affected in similar ways, and they're not really a protection against the currency. What do you say?
I agree partially, and I don't want to, I'll just tell you how I feel. I think that, and I've said to be consistent, I mean, I have a lot of, radio shows out there, and I've done a lot of investment conferences over the last 20 years. I say that gold and silver are the top tier of all commodities because they are money. But I want to qualify that, and I haven't done this in a long time, and I am being consistent. There are times when they act like any other commodity. I absolutely agree with you, Todd. There are other times when they are money only. Silver particularly. I mean, silver is like bipolar. Silver is a hedge both directions. What do I mean by that? Well, silver is gold's little brother. So if you look at gold as a safe haven status at times when, let's say, the financial systems are in disarray or people are seeking safety, silver has that same role, but to a much lesser degree because 50% of the market is an industrial commodity. So it's a hedge both directions, meaning that if we have a booming economy and everybody on the planet is going to buy a second cell phone, which uses silver as an example, they also use gold, all those smartphones use gold, you are going into, you're hedging a runaway, really booming positive situation. On the other hand, since it's also a safe haven status that's a subset of gold, basically, you're also hedging the monetary side. So because of that fact, it moves both directions much more violently than gold does, because one, it has those two statuses, and secondly, it's a much smaller market. Coming back full circle to gold, I mean, gold has been money for 4,000 years or more, and it's the only one that hasn't failed. Every fiat currency on the planet has a 100% record of failing. The U.S. dollar is still the reserve currency of the world, and it's failing by my analysis because from the 1913 dollar to present day, using the Federal Reserve Board's own numbers, it's worth 4 cents. So if your child brought back a quiz of 100 points and it was 4 out of 100, and they gave that to you, you'd probably say that is a miserable failure. And that's where we're at. So now we're kind of arguing about, well, how much of that 4 cents is left? How well is it doing against the other currencies of the world at all? And all that's valid. I'm not trying to say it isn't. Certainly the dollar's been on a rip here for quite some time, and I think it's going to continue for several more months, probably more than a lot of my peers. However, at some point, the trust of going to liquidity, going to the dollar, going to cash, and all that's taking place. A lot of people have that mindset now, getting out of the market or lowering their exposure or hedging or whatever they're doing and going into liquidity, which means cash, and for the most part that means a U.S. dollar. Sounds really safe, and I agree for the time it probably is. But if you look at the work of John Exter, which I talk about quite often, the upside-down pyramid of liquidity, the ultimate liquidity is gold. So this is something that I see as part of the process where we're going to move into safety, which means dollars or currencies. And we have to bear in mind the world we live in. And the world we live in says that the Dodd-Frank bill, which was passed some time ago, states that there will not be any more bailouts. And what does that mean? Well, it means if you read the law, bail-ins. And what does that mean? That means that you could have a haircut on your bank account, which is a polite way of saying that you are a creditor to the bank, and that money is the bank's money, not yours. And so what happened in Cyprus, as an example, is at law a possibility, I'm not saying a probability, I'm saying a possibility of taking place throughout the several states. Now, if that were to happen, a lot of people would say, geez, I wish I would have hedged in the precious metals. The other point being is that they're clamping down on cash transactions. Why is that? Well, there's lots of ways to look at it. You could look at the conspiratorial view and say, well, they don't want you to exit your cash position with physical greenbacks. They want you to stay in the system. So if there's a haircut, you've got nowhere to go. Of course, there is a way to go. And one of the ways to go is into the precious metals in a physical form. Now, having said all that, Todd, I want to take a deep breath and say, look, I am a pretty practical guy. You know, I've got a few decades on me. I've been in the markets for 40 years. I've seen a lot of things, and I certainly don't know it all. I'm always learning something new. But you got to put it in big perspective, which means a 10% position in the metals is probably sufficient for almost everyone. If you're really a gold bull, a real, commodities nut, if you really think that that's the way to go, you're an adherent of Jimmy Rogers or some of the commodities guys, and I lean this way, and certainly myself, I'm at the 20% level. So, but I'm not at the 100% level. Some people hear about, how money's created and how central banks work and, bullion banks and all this stuff, and it's all valid. But you have to put it in perspective. I mean, the world's still turning around. We're still looking, look at all the commodities. I just watched your update on, on the meats, on the feeders and the live hogs in the cattle market and all that. And, all this stuff is valid. I mean, but that's why I favor the commodities market. So I'm a little off track. You can bring me back. But the point being is don't overinvest in any one sector. Nature preaches balance. Have balance in your portfolio and take an attitude of what it really means. So for the most part, it is a safe haven hedge status most of the time when we're in conditions that we are presently in the financial markets, meaning the central banks have basically lost control. That's when I look at gold as a safe haven status and not merely a commodity. Is that the case all the time? No. It only happens rarely in history, but at those times you definitely want to be in that sector. So I'd love to hear your perspective on that, if you think it's always just a commodity, because certainly I'm open-minded, and maybe you can make a better argument than I have.
Oh, I can't make a better argument than you can, but I just always believe it's a commodity that trades like any other commodity, and it'll trade, in a range that right now we're near the lows. I mean, we've had a nice little rally the last couple of months, but basically we're down near the lows now. If it's really a currency with all the crap going on in the currency world, you would think that gold would have rallied a little bit more. Now, again, I'm a big believer in owning gold. I mean, I'm not an anti-gold guy at all. I think your number of 10% is closer to my belief, but I believe everybody should own some hard assets. I actually like silver a little bit better to go along with you, but I'm a believer of owning it, and I'm a believer of owning it hard, the actual physical raw commodity versus anything else. But again, I hedge my portfolio against itself, so I don't have to worry about hoping that gold goes up in dire straight markets when things are going on. I have to be able to operate because, again, you can get into all the different types of commodities or currencies, however you want to call them. There's Bitcoin now, which is another, currency, if you want to look at it that way. Now, I don't know. I'm not a fan because it's got no backing, and I can't hold anything in my hands. So I'm more from the school that gold is a commodity that will go up and down based on, now again, to your defense, gold, if the dollar gets weaker, gold will go higher. So it is against the dollar, but if you look at it from that standpoint, then it's no different than any other fiat currency or any other commodity. It's really more dependent on the dollar than anything else right now. Now again, I haven't seen it where it's become a major fear trade. I've yet to see that in my lifetime. Now, maybe you have. I mean, I do remember the Hunt brothers, but they created their own fear in silver, and then they got it stuck up there. You know what? Because they were too smart to take what the CME offered them, or the Board of Trade offered them. But those things myself, I look at them as a hard asset commodity that I want to own a portion of. I want to be involved because I believe over time it will appreciate like most hard assets that are good investments. And that's what I look at it as in my own personal view. I am not a believer in, I would never buy it if I was panicking, but I don't panic. So that's another problem. But I don't believe that when everybody who hoards all the gold and says, well, the chicken little, the sky is falling, because I don't see that part of the world from my perspective. But when we come back from the break, you can tell me if I'm right or wrong. And I also want to know, do you like, when we come back from the break, of course, do you like paper assets of the gold and the ETFs, or do you like the physicals? I am with my new friend who can help me out here because he's good at telling good stories. David Morgan, The Morgan Report, silver-investor.com, has been in the business, and I'm sure he's a big fan of Peter Schiff based on my conversation with him so far. I'm sure that he loves the gold space, and I have no problem with it. I think that, like anything else in life, we do everything in moderation. I think that's the more pure answer to anything else. But make sure you check out BubbaTrading.com and see what we're writing about, and see we've got a couple of new courses coming up in the next week or so, the futures day trading course as well as the hedging course, which is both starting next week, the 9th and the 10th. This is Todd Bubba Horwitz. I am with David Morgan from silver-investor.com. If you miss an episode, miss a show, go to libertytalk.fm. You'll get it on demand. This is The Bubba Show. Todd Bubba Horwitz will be right back after the break. The Bubba Show.
I don't need baggy clothes or rings in my nose to be cool. The scars on my knuckles match the scuffs on these cowboy boots. And there's a whole lot more like...
What's up, Bubba Show listeners? Bubba here. I've always thought of ways to better educate and better help the individual trader and investor, as well as some of the brokers out there. But one of the things I always found out was the lack of real good, solid information. Are you tired of the fear ads? Are you tired about the fear mongers grabbing out to you and telling you how the world is coming to an end? We all know that the market has had a dramatic run here, and at some point it's going to sell off, and there's going to be a big correction, and we're going to have another bear market at some point. Does that mean you should pull your investing out? Does that mean you should change things? Well, Bubba has a couple of strategies to offer you, and we do talk about options protection for a long-term portfolio and how to keep you in the game. But one of the things that we do have coming out in the year 2015 is I have assembled a team of experts that are going to put together a monthly newsletter for everybody. that will come out the first of every month talking about the overall market conditions, whether you talk about commodities, alternative investments, equities, oil, everything that you can imagine that you can be involved in. And we are going to do this each and every month. We've got the top guys in the business, Keith Bliss, Scott Chalady, myself, the Badger. We're all going to be writing and contributing to this particular newsletter. And this is something that will be each and every month. The first of the month will be delivered to you through email. We're going to be working on this. The subscription fee for this is $99 a year. You will get 12 issues loaded with strategies, webinars. You'll be invited to webinars. It will be the answer to all of your investing needs. All you need to do is email me at bubba@thebubbashow.org and say, I want to be part of that letter. I want to be ahead of everybody else, because you will be there if you do so. So email me at bubba@thebubbashow.org right now, and we'll get you hooked up. Hey, Bubba Show listeners, you know how important education is to Bubba and how I preach that we need to learn and understand. Well, I've developed a high school curriculum for all of you educators out there that you can bring into your school at no cost to the school, which gives you everything from investing, from learning how to open up a credit card to a bank account, to all the way to trading sophisticated strategies. And you can work at your own pace. I have produced all the material that you will need to be a better teacher, investor yourself, as well as bringing it on to the young people of the world, because you know how important I do think that education is. I want you to email me at bubba@thebubbashow.org to get more information, more detail. You can take a quick look at my site at highschoolinvesting.com, but email me at bubba@thebubbashow.org, because I want to hook your school up and make you guys better and help you to help yourselves while you're helping your students. Advisors and investors, do you want to stay whole through the next crash? Do you want to find some better long-term strategies to invest in? Are you looking for a better way to protect the portfolio, or do you want to stay stuck benchmarked to that S&P, which really has no real value? I'm telling you right now that if you check out my friends at Circle Squared Alts, ALTS.com, and my man Jeff Sika, go to his website, check it out. You will find some alternative strategies that will help you not only protect your own portfolio, but if you're an advisor, help you protect the portfolio of those that invest with you. It's something that is extremely important, especially as we know how markets do fluctuate. At some point, we are going to have another market sell-off. I recommend to you now that you go to circlesquaredalts.com or email me at bubba@thebubbashow.org and check it out. My man Jeff Sika, bubba@thebubbashow.org. Check it out. Welcome back to the Bubba Show. Todd Bubba Horowitz with David Morgan from silver-investor.com. Also, the Morgan Report. All right, so David, so I gave you my views. Now, do you like the paper gold, or do you like the hard gold in your hands in your safe?
I've been very consistent on that question. As long as you build your portfolio with real metal first, and some people are, strictly hard asset, hold in your hand types. There's a few of those. I'm favorable to doing anything once you've got that core position. I mean, depending on your worldview or how you look at it, which we just discussed, and you even agreed, I think, that, when you said you have a position, it's the physical stuff. So that's what I've taught for years. Once that's achieved, where you go after that is your business. I think, the ETFs are fine for trading or hedging. Certainly the mining stocks used to be kind of the best place to go for leverage back in the early days, back as I told you at the beginning of the show, my 20s. I mean, you could get into some of the South Africans at the time, and it was just incredible. If you got in early in the market in the 70s, by the time we're getting into the late 70s, your downstroke was equal to the dividend at the end. Let me explain. For example, if you put $1,000 in a top-tier South African, your dividend would be $1,000 a year near the end of that market. Incredible gains. But those days were those days. Now, most hedge fund managers, money managers, pension funds, day traders, whatever, are looking, they don't want the risk of a mining company. So the ETFs have been developed, and several subsets of them, where all you have to worry about is the price of silver or the price of gold. You don't have to worry about mining management or jurisdiction or a flood or a labor strike or any of this stuff that encompasses the mining aspect. So the mining sector has really been much less of a prominence in this bull market than it was in the previous bull market. And again, I'm old enough to have lived through two of them. So I'm okay with all of them. I mean, it just depends on a person. A lot of people don't understand when they're new, and some of us, like me, that are a little hard to teach. It takes a while, the school of hard knocks, to get in sync with the markets with your own personality. I mean, I'm great at position trading. I'll blow myself up day trading, and I know that. So I don't bother with it. Plus, I travel so much. I mean, there's lots of reasons to do what I do because I've learned myself and my methodologies and what works for me. Anyway, the point is that I think I'm okay with all of it. I mean, there's 2 times, 3 times factors, short and long in the gold and silver markets. There's the straight ETFs. There's also what I call holding companies like the Sprott PSLV, the physical trust. There's the Central Fund of Canada. I mean, there's some of these that are actually holding physical bullion. Some of them you can actually withdraw the bullion, others you cannot. So there's a plethora of investments. In fact, if I could digress for a moment, when I met Rick Santilli outside of the exchange on one of my early trips there, 15 years ago, and I just introduced myself. Rick was doing this thing outside, and he said, I mentioned gold, and he goes, oh, gold. Of course, this is at the bottom, too. He says, there's so many financial assets now. I just don't see it happening again. And this was like late 90s, probably early 2000s. And, he made a really good point. I mean, from the time of 1980 till 2000, 20 years, the financial markets had expanded exponentially as far as what your choices are. And that was the point Rick was making. And I didn't argue it. I just said, I look at it, like a hedge position or inevitability. I think this whole system is going to have to be reset in one way, shape, or form during my lifetime. And, in a way, I feel vindicated with what happened in 2008. And I wasn't rooting for it. Believe me, we all have a vested interest in the system continuing. Believe me, I mean every word of that. Nonetheless, we certainly had a big wake-up call during the 2008 crisis, and in my view, it remains to be determined whether or not they fix anything. So that's my take.
Well, let's get on that, because now you're coming back into some of the things that why metals and why this and why that. I think they fix nothing. I think they've done a lousy job. I think the Fed, as it stands now, should not even be a part of it. I think it's not the private organization that they were supposed to be. They're controlled, I believe, I don't have facts of this, but I believe they're controlled by J.P. Morgan, Goldman Sachs, and a couple of the others, as well as partially by the government, which is supposed to be a private non-government agency. And I think they've done probably the worst job of putting together a plan to fix anything than anything I've ever seen in my entire life. What do you say?
Absolutely. I mean, well said. Let me be your cheerleader. That was awesome. You're absolutely 100% correct. I mean, the whole thing about the Federal Reserve that people don't understand is like the history of it. If you look at how it started, what the mandate was, and what kind of currency status we had, which was actually bimetallism, to where we are today, we're in a real dire strait. And I mean every word of that. The one thing we teach our kids is there's no free lunch. You can't get something for nothing, but the whole system is based on getting something for nothing because the Fed can create money that the government has to borrow. It doesn't just print money. That's a misnomer. What happens is the federal government doesn't create anything except misery. Excuse me, I'm off. They have to borrow money from the Federal Reserve. And so that money is loaned into existence with interest. And this is getting something for nothing. And then who is on the hook to pay for it? Well, it's the taxpayer. That's who. It's not the government handing things out. It's like you're borrowing from yourself. But when you run out of people to borrow from and they can't pay it back, what happens to government? And I get in this argument all the time, like, oh, governments don't fail. Well, why don't you look up the Roman Empire? How about the Byzantine Empire? How about the Mesopotamian Empire? Empires do fail. So, Todd, I think we are at the end. Not the end like everything collapses and burns to the ground. That's a misnomer. If you have a financial collapse, which is what we really saw in 2008, nothing has really changed except the rhetoric. It's good, it's good, it's good, it's getting better, it's better, green shoots, green shoots. It's all nonsense. They haven't fixed anything. They've made the problem worse, which means the day of reckoning is approaching, and it's probably going to have a bigger consequence than 2008 because they've added to the problem. And so you can never, ever get out of a debt problem by adding more debt. Yet during the time of 2008 till now, we've doubled it. Not to even mention the derivatives exposure, which you're probably a little more versed in than I am. But these are bets on bets on bets on bets. This is ridiculous. This thing is exponentially a crisis just waiting to happen. Does it mean the end of the world? No. Does it mean everything stops? No. During a financial crisis, all the wealth stays in place. All the buildings are there. All the cornfields are there. The oil wells stay there. The cars are there. All that stuff is there. That's real wealth. What happens is there is a huge readjustment in who owns it. And there's a lot of defaults, and there's a lot of, let's say, reckoning of malinvestment or misallocations or these large bets that failed, counterparty risks that can't pay, and that type of thing. And it's huge. It's bigger than it's ever been in history. But it doesn't mean the end. It means a huge, what I like to call reset, which I think is a fair name. And there could be a second Bretton Woods, Todd. I don't know how it's going to resolve. What I do know is, and excuse me, I don't like to pick on anybody, but honestly, I must state it, Janet Yellen looks like she is absolutely lost whenever I see her on TV. I mean, I think she's probably got a good heart. I don't think she really understands what's going on. I think she knows enough to be scared to death. And it comes across to me, the way I see her, as very perplexed. And everything is data-driven. Well, Janet, look at the data. It's not very good.
Well, I call the Fed the incompetent led by the ignorant. So, they're very smart people. I cannot take away the grades they got in school. But you and I know one thing. You cannot operate any business in the United States of America is a business from a textbook, because you have to be willing and ready to make adjustments on the fly and not do things like everybody else is doing. And of course, the band leader, well, the first band leader was actually Greenspan. Nobody wants to talk about him, but he was the first band leader. But Nandita Bernanke, who started the currency war himself, and then balked when he had the perfect time to start raising rates and let the economy come out of a possible problem. And, of course, he balked. He let the markets kick him around. And, of course, Janet Yellen raises last December just because she could. Not because she should have, because that was probably one of the dumbest raises in the history of the street, because you don't raise into a slowing economy. If you're at that position, you don't raise into a slowing economy, which they did. So in my opinion, they've done absolutely nothing right. They are brutal at their execution. And what they've really done is they've taxed the middle class that's still in a recession, that has never come out of that recession, because the Federal Reserve decided that it was time to take care of the banks, the very same people that put us in the financial crisis. And you know what? Who's going to put us in again? Guess what? The debt now from student loan and auto debt is bigger than the housing bubble. So now we've got the next bubble getting ready to burst. And again, and as you said, and I don't ever preach panic here on the show. It's not what I do. I'm look for one level at a time. I'm not going to tell you we're going to 6,000. We might go there eventually, but we ain't going there tomorrow. And it's not going to be a one-off event. You're going to see vicious rallies in bear markets like you always do. And the truth of the matter is that a good, healthy kick in the ass for this market and for this economy is probably a good thing, because the truth is that we got too many people that are working that aren't making enough money and are well over-skilled for the jobs that you're in, because we don't create jobs anymore. We just try to create money. And that becomes another bigger problem, which we'll talk more about when we come back from the break. We are with our new friend, David Morgan, silver-investor.com, the Morgan Report. You can hear it. He knows how to talk, ladies and gentlemen, and he has a great opinion. So we like him. We're glad he's here with us, and he's bringing a lot of good information as he shared with you his views of how the markets work. And we're going to come back and talk about how these markets are going to work and what's the best strategies to use, and more about his company. But this is the Bubba Show, Todd Bubba Horowitz. Make sure you go to BubbaTrading.com and check out our programs, see what we're doing now. We've got some great things happening, and we've been able to help people that will eliminate any of these disasters that we're talking about through our hedging program. But for now, we're going to step out for a break. If you miss a show, libertytalk.fm. Every show is there on demand for you. And again, we're with David Morgan from the Morgan Report and silver-investor.com. The Bubba Show will be right back after the break.
I've been feeling real good. Came a long way from misunderstood. Far away from the days where I wouldn't wanna go home, cause I was afraid of the truth. See, I was scared to admit the feeling was in the back of my head. Cause the point where line no longer works, so you have to stand up for how you wanna live.
Hey traders, are options your game? Well, guess what? Bubba and Badger are going to put together a 12-week webinar series to teach you options from the very beginning to the very complex strategies. We will be doing a 1 hour, once a week webinar telling you exactly what options are, where they become effective, and how to use them. Now, there's going to be a cost here. If you have some interest in learning the option market from the apps from the very beginning, if you've never traded options before, or if you are someone who wants to get a little bit more experience and get an idea from 75 years of training and trading, I urge you to email me now at bubba@thebubbashow.org, because I want to hook you up. There is going to be a cost associated with this. I will be happy to discuss it with you personally, but get involved. 12 sessions with Bubba and Badger, 1 hour training. Email me, bubba@thebubbashow.org now. Traders, 2015 is going to be your year. And what I want you to look at is I want you to look at a product that I'm involved in called the Options Money Machine. It's a service that we offer that creates weekly opportunities to take benefit of the weekly options by selling spreads, collecting credit, and creating an income stream for yourself. Now, as Bubba always says, no trades or series of trades are always guaranteed. But over the last 18 months, my Options Money Machine program has generated over a 65% return. I want you to check it out and see if it's right for you. That is the Options Money Machine. And all you have to do to get more information is email me at bubba@thebubbashow.org, and I will be happy to hook you up, walk you through the program, show you how it works. But it is the Options Money Machine that is done with a weekly webinar every Thursday. All you have to do is email me at bubba@thebubbashow.org to get hooked up with the Options Money Machine. Bubba Show listeners, Bubba here. You know, as the markets continue to move higher, we often talk about protection strategies. We worry about what will happen next. I did a webinar a couple of weeks ago about how to protect your long-term portfolio using options. And as my gift to you, I want to offer that to you at no charge. I want to send you the link that will take you through step-by-step of different strategies that we use on how to protect a long-term portfolio, to lock in your gains, and to continue to benefit if the markets do continue to go higher. All you need to do to get a hold of that webinar is email me at bubba@thebubbashow.org, and I will send you out a link and where you can watch it. There's no cost to you. This is something that I want to make sure that my Bubba Show listeners understand how to hedge and how to protect the portfolio by using options. So email me now at bubba@thebubbashow.org, bubba@thebubbashow.org right now, and I'll send it to you.
A man walks down the street, he says, why am I soft in the middle now? Why am I soft in the middle?
Welcome back to the Bubba Show. Todd Bubba Horowitz with David Morgan from the Morgan Report, as well as silver-investor.com. And he's been filling us through knowledge, and we've been battling. I do have to ask you one question because you are an alternative kind of guy. Bitcoin, what is your feel, your take, and your views?
Wow, great question. If you Google David Morgan Bitcoin, I wrote one article for the public domain, and I'm pretty reserved. I like to, really study things before I form an opinion. My opinion is similar to yours. I said, look, I'm a free market guy. So if the free market says that Bitcoin's the best thing that ever happened, who's David Morgan to say, no, it's not? If the market votes and says yes, then I'll say I was wrong. But my opinion has not changed, which means I don't like it from the aspect of two things. One is it's not backed by anything. And yes, there's a limited amount and all that, which is the argument that if you just have the correct money supply, well, life will be wonderful. I killed that argument in our book, The Silver Manifesto. But moving on, I just did an update on Bitcoin in the Morgan Report for February, which was released yesterday. And it talked about the blockchain and how this thing requires memory. And of course, memory is very cheap now. It used to be expensive, but nonetheless, it's an exponential curve. Whenever you have an exponential curve, you better look really hard. Anyone that's ever traded commodities for very long knows what an exponential curve looks like and knows when you are in that status, you better really pay attention. So anyway, it's a problem. And I go through it briefly in the Morgan Report of why this issue is something that really no one's really addressed. I mean, there's a lot of great thinkers out there that say they can break it off and start a new blockchain and all this stuff. Show me, don't tell me. I haven't seen it yet. So I'm not that favorable to Bitcoin. I am favorable to alternatives. In fact, there's a friend of mine here where I live that has a gold and silver backed debit card, which is, I'm going to call it a halfway function. And what do I mean by that? What I mean is that you have a standard debit card, not credit, it's debit. You can deposit gold or silver or buy it from him, and that money or those assets, that physical metal, is held. And that's outside the banking system. Simultaneously, you are within the system and has to go through all this, blue sky and verification of your identification and all that stuff for any normal bank account that you'd have anywhere in the States. And you have a cash side like any debit card. So what I've done is I've cashed up one side and got metal on the other side, and I go out and use the debit card like I do on anything, groceries, gasoline, etc., and it only debits the cash side. But when I want to spend silver or gold into it, I just make that click on my mouse and say, okay, I want to start debiting this. And everyone says, well, what about, reporting and all that? It's all taken care of. I mean, software is pretty easy these days. So if I loaded up my silver account with silver at 30 and I spend it into when I buy gas, it will show me my loss and it'll show me the negative, and I could report that as a loss. Or conversely, if it was a gain, I could report that as a gain. So it's all taken care of for you in the system. So it's a hedge. It's a smart way. One of the biggest questions I get, especially from the gray hairs, the older generation, is, I really believe you, David, but I don't know how to sell it. Well, you don't have to sell it now. You can spend it. You could spend it like you could on a debit card. You could use it for a payment for a college education for your grandson, as an example. So it's a great deal of versatility. A friend of mine, I was trying to start, Todd, for a long time. I spent about 2 years on and off looking at different banks. I had a relationship with Scotia. Scotia's ready to do it, but they said, David, all we need is a guarantee of 1,000 signups. And I can't do that. I'm not going to lie. I can't. So anyway, I voiced it after the state of Utah governor signed into law that you can use gold and silver in any transaction you want throughout the state as long as both parties agreed. I was there for the ceremonial signing of that. I was lecturing about that at the Silver Summit a few years ago. This guy flies up to the podium and says, hey, David, this is my passion. I really want to do it. I said, good luck. About 2 months later, he says, I've implemented it. I go, how the heck did you do that? I've been trying for 2 years. So anyway, enough on that topic, but there are alternatives. You brought up Bitcoin. This one I think is much better, but that's my belief system. Let's turn it over to the audience. Let's turn it over to the free market and see what they think.
Well, I agree. I mean, I have a friend of mine in Vegas that does exactly what you're talking about. I mean, he's actually got stuff open with Macy's and things like that. I mean, they do have payment systems that do that. And listen, I take Bitcoin for my products and services. So, I'm not a big believer in it, but I take it and I immediately take the spread and I immediately turn it over. I mean, just as many of the big firms do now. I mean, if it's the way that somebody wants to spend, I know how to get rid of it if I don't want to hold it, which I don't, because again, I'm not a big fan. I'm a big fan of liquidity, and I don't see the true liquidity yet in Bitcoin, and I'm always concerned when I'm dealing out in the wild, wild west of no backing or nobody's going to guarantee my money. And I don't know about how you feel about those things, but I like to be involved with. I know at least my money's kind of somewhat guaranteed, and it's not going to disappear like it did with Mt. Gox and places like that over the years. What do you think?
Oh, I'm with you 100% on that. And I want to just divert a little bit. I know we're kind of running out of time, but something I like to bring all of your audience into is a film that I was in. It's not about me. Believe me, there's a lot better thinkers in this movie than myself, but it's called The Four Horsemen. And you can watch it for free now. If you go to YouTube, just log into youtube.com and then in the search engine type in Four Horsemen film. It talks about the age of empire, and it kind of gives a broad base of where we are in the global financial empire and why why we're on decline. It kind of sums up everything that you and I have talked about, Todd, in a more broad brush way, and then it goes into the detail. And I really believe that this film is a great educational tool for people that are like a little skeptical people, and they maybe believe the mainstream more than you and I, that gives them something to ponder, because it's really well done. I was interviewed in London at the time for like 4 hours, and I've got, I don't know, 4 minutes in the film, which is fine. I enjoyed the interview, every minute of it, but it's well done. So again, it's free. You can get it on YouTube, Four Horsemen Film, and it's an hour and 38 minutes long. And if you don't like it, write me and I'll refund your time. So
if you could do that, we'd all be in great shape. That's the one. That's the one asset class nobody can buy, no matter how much money you got. You can't buy time and you can't buy health. So when you look around, and we both agree, pretty much we're on different sides of the spectrum, but we pretty much agree on the basics of it. Is Bitcoin a realistic currency of the future, possibly? Is there going to be some way to back it? I mean, what do you see going forward? Are we going to be with gold and silver as always?
Well, one of the reasons, again, I'm rebranding the Morgan Report is, I'm a pretty good thinker. I mean, to digress a lot. One of the biggest assets that we had, or should I say trades, was the cellular phone industry. I mean, I got on that as a visionary very early when, these things look like great big shoe boxes that you went around. But coming back on point, I think Bitcoin will evolve. I think the best thing is something like I just described on the silver and gold debit card, is there'll be a Bitcoin type of entity that's backed by real assets like gold and silver. I think that's probably the next step. But I want to go on to say that fintech, that's the slang term, fintech. Financial technology is something that is taking place. It's more than green shoots. It's really happening. And like any new situation, it's something that there'll be a lot of stuff that pops up. Some will be viable, some won't, and the free market will determine which ones are the survivors and which one aren't. Look at the internet bubble. I mean, there was dogsandcats.com that had no assets and no business plan, and they were selling their, trading their stock. But Amazon is a true leader. So anyway, the point is that this financial technology really enthralls me. I've got some fairly good connections in some of the people that are leading that space, and we'll be interviewing them on our mastermind series, which is like the upgrade service of the Morgan Report. And I'm watching that space very closely because I think that's where we're going. So, if we're going to look for government to solve the problem after this financial reset, great. That's okay with me. I don't want to control the world, but I have very strong views. And on the other hand, if the free market with this financial technology comes up with 2 or 3 really viable ways for people to do daily transactions, settle their grocery bills, and or invest, that's something I really want to be on top of and watch it grow, see how it develops, etc. So that's an area that we will continue to watch as it progresses.
We'll get that next time, but I'm going to give you this to think about before you go home, is how come I'm not on that mastermind interview? This is David Morgan from the Morgan Report, silver-investor.com. Check him out. Obviously, you just heard him go on, and he's got great understanding, and he does believe in the backing of overall markets in some way, shape, or form, because he knows the same problems that do exist. Now, we both agree that there's a few flaws in our system, and they need to be fixed, but we'll have to solve the problems in the world next time. David Morgan, thank you so much for being here.
Todd, a true honor. Thank you.
This is David Morgan, the Morgan Report. If you missed the show, go to libertytalk.fm. Always there on demand. This has been the Bubba Show. We spent the day with David Morgan from the Morgan Report, as well as silver-investor.com. We'll see you back here tomorrow, same time, same station. This is the Bubba Show, Top Bubba. Have a great day, everybody. Thank you so much for being here. We'll see you later.